I'm not a financial advisor. This is not financial advice. Please do your own research. Welcome to the Vinny G Markets channel, brought to you by Vinny G Money. Now, the markets have been rallying as of late, and it can be attributed to one thing, and that's the ECB's, European Central Bank's unlimited bond buying program. We've been over this in our last video, and we'll get into that more on why it's been creating these market rallies and the actual timing of it. But let's take a look at the markets in general. We have the S&P 500 for the month. It's up 1.28%. Year to date, S&P 500, it's still down negative 17.41%. The Dow Jones for the month, it's up 1.27%. Year to date for the Dow Jones, still down negative 12.81%. And then we have the Nasdaq, our biggest gainer for the month, up almost 2%. But Nasdaq year to date, it's still down almost negative 25%. And the reason why the Nasdaq had such a nice boost is because the interest rates dropped, and we'll get into that. Of course, it's solely because of the ECB bond buying program carrying over to the United States, or at least the perception there's going to be unlimited bond buying to control these interest rates. And what this is, it's pure market manipulation at its finest. And as we continually state on this channel, the Nasdaq being tech heavy, it's going to be interest rate sensitive. So when those interest rates drop, obviously it was going to get a nice boost along with the rest of the market, but the Nasdaq a little extra some. And what also gave the Nasdaq a nice boost is the Senate. They passed a new chip bill. Senate advances more than $50 billion bill to boost US semiconductor production. And all this really is the government giving free money to the big chip companies such as Intel, Nvidia, AMD. And I'm sure plenty of you heard Nancy Pelosi's husband made some good money off this on trading these companies. But we're not really going to focus on that. This bill's been out here for a while. Anybody could have made that same play. Plus, you could have tracked Nancy Pelosi's trades anyway. And plus, we all know that these politicians, they're not out here for our best interests. They're just doing what's being told by the NWO. So the NWO, they're just trying to get certain emotions out of people by making these trades public and telling them to do these trades. So we're not going to get involved with that. We're not going to play their game. We're just going to focus on doing what's best for us. And that new chip bill is a big reason why the Nasdaq had a nice boost this month, along with the interest rates significantly dropping, which brings us to our first indicator, the US 10-year Treasury, currently sitting at 2.75%. This is a huge drop. We know that it spiked to 3.5% from our last video. So not only is it below 3%, it's well below 3% at 2.75. And this is only because of that ECB bond buying program. We'll take a look, but anytime they made an announcement at this program, that's what dropped these interest rates and created these stock market rallies. So we're definitely going to take a look at this more, but we have to decipher whether the interest rate manipulation being done by the central banks, is that going to create more market rallies, or is that just going to be used to have a controlled crash where the market has these rallies but just go lower over time, and they use the interest rate manipulation just to avoid a market crash and to keep people confused on whether they should keep their money in the market or should they pull it. But for now, let's take a look at our next indicator, the US dollar index, which has been soaring. It did hit 109 at one point. It did cool off to 106.55 where we currently sit. But what we say, as this rises, it's going to hit the stock market, which has been going on. But from it cooling off from 109 to 106, that did help fuel these market rallies as well. So we'll keep an eye on the US dollar index to see if it's going to go up from here or continue to cool off, because that's going to be a good indication on where these markets are going to be heading short term, along with the prices of commodities, which brings us to our third indicator, crude oil. And our big hitter has been getting slammed still as of late. Crude oil currently at 94.70, and the rising of the US dollar index has definitely been taking a toll on crude oil and other commodities. It's one of the main reasons why crude oil has been taking a hit, but the lamestream media, they put other narratives out there as to why oil is taking a hit. We have here oil tumbles as much as 10%, breaks below $100 as recession fears mount. I have no problem with these recession fears. Why? Because we already know we're well past recession. We go over this in all our other videos. Recession is well beyond what we're currently in. We're in an undefined state we're much worse on a recession, so I'm not worried about this necessarily. But the lamestream media, they also talk about surging fuel costs are causing demand destruction. So demand destruction is a big word that the mainstream media is tossing out there, but I just don't see any significant demand destruction. You have travel demand just surging to the point where airlines have to cancel flights because they can't handle all the travel demand. So people are still going out spending money. People are still buying cars to the point car companies are still jacking up their prices because people aren't slowing down the buying of these vehicles. So I just don't see this demand destruction. When it comes to energy and oil and people's ability to move and travel, that's going to be the last thing people cut down on. They'll cut down on other luxury items, but when it comes to essential items such as crude oil, I just don't see the demand destruction. And also when it comes to energy, when we have a heat wave coming over the United States, especially in Texas, the citizens are being asked to conserve on energy. I think they've been told 2 or 3 times now to start conserving. I just don't see people shutting off their air conditioners or conserving on energy even as the prices spike. So they could charge what they want for this energy and people are gonna pay. That's just my opinion. So I just don't see crude oil or even energy going down. In the short term it might, but I'm still very bullish on it, because another reason why crude oil has been taking a hit is because the United States president recently went to Saudi Arabia to try to plead with them to increase oil production. But that trip to the Middle East, it had nothing to do with oil, which is why I don't think none of that matters. That trip was more about building alliances for the eventual World War III. I don't have an exact timing on that obviously, but the escalations of Russia and Ukraine, it's only gonna move into other countries. So even though the mainstream media was reporting President Biden going to Saudi Arabia for quote-unquote oil concerns, we had President Biden stopping in Israel where he signed the Jerusalem Declaration, and as stated, the declaration further underscores the American commitment never to allow Iran to acquire a nuclear weapon, that is prepared to use all elements of its national power to ensure that outcome. The United States further affirms the commitment to work together with other partners to confront Iran's aggression and destabilizing activities where advanced directly through proxies and terrorist organizations. Also stated is the only thing that will stop Iran, knowing that if they continue to develop their nuclear program, the free world will use force. The only way to stop them is to put a credible military threat on the table, adding that such a threat should not be a bluff. The Iranian regime must know that if they continue to deceive the world, they will pay a heavy price. So what was also conveniently discussed with Biden and Saudi Arabia, we have this: US, Saudi Arabia agree on stopping Iran getting nuclear weapons in a joint statement. And we're not going to get too much into this, you could do your own research if you want, but the Saudi Arabia and Iran conflict, it's not a secret that it's all about the Sunni Shia divide in the Middle East. So when you start piecing this puzzle together, you start seeing why it made sense for the US and Saudi Arabia, as said in this article, to agree on stopping Iran getting nuclear weapons in a joint statement. But days later, what did Saudi Arabia announce? Saudis say oil decision off of OPEC as Biden leads kingdom. So obviously this had nothing to do with oil production, which is why this shouldn't have any type of bearing on the oil prices. But following this storyline for what it is, which is global conflict, we have Iranian official says Tehran capable of building nuclear bomb. So Iran, even with all these meetings going on, they're not backing down from their capability of building nuclear weapons. And as the United States was strengthening their alliance with Saudi Arabia and Israel against Iran, where did Putin go? You guessed it, he went to Iran. Putin forges ties with Iran's supreme leader in Tehran talks. This was his first trip outside of Russia since the Ukrainian invasion, and these are some of the things discussed during this meeting. He said Putin had ensured Russia maintained its independence from the United States, and that countries should start using their own national currencies when trading goods. The US dollar should be gradually taken off the globe trade, and that this can be done gradually. And shortly after this, the United States White House says Russian officials visited Iran twice to examine drones. So we have Russia possibly getting drones from Iran. And to know that these conflicts are very real, all you have to do is look at Iran on a map. Where is Iran? Smack in between Iraq and Afghanistan, which were the last 2 wars of the United States. And within President Biden's trip to the Middle East, he clearly stated the US will not walk away from the Middle East, showing that this conflict conflict, it's not going anywhere. So not only is there conflict in the Middle East with Iran, Saudi Arabia, Israel, United States, we also have conflict in Europe, which is Russia and Ukraine. Also, Russia talking to Iran now. We also have conflict in the Far East. We have Taiwan slams provocative China for sending fighters across Taiwan Strait. And the significance of this, next month Nancy Pelosi is supposed to visit Taiwan, and we have China Heiden's warning to U.S. over possible House Speaker Pelosi visit to Taiwan. And over here we have China has issued stark private warnings to the Biden administration about a possible trip to Taiwan in August by U.S. House of Representatives Speaker Nancy Pelosi, the Financial Times reported on Saturday. China's foreign ministry said the next day a visit to Taiwan by her would seriously undermine China's sovereignty and territorial integrity, and the United States would bear the consequences of its response. And while this is happening, we bring Saudi Arabia back into the mix. What did the Saudis say? Saudi Arabia ties to the US and China are not mutually exclusive, minister says. We build bridges with people. We don't see one as exclusive to the other. And this is significant because as of late, we've had Saudi Arabia considering accepting yuan instead of dollars for Chinese oil sales. And if this were to happen, it would put a serious dent in the United States dollar being the world reserve currency, which is the reason why the United States going to Saudi Arabia, it had nothing to do with the price of oil. It had to deal with how can Biden reverse China's gains in Saudi Arabia, preventing their further influence of what's going on. And also adding to the Russia-Ukraine conflict, we have Russia moves to annex occupied Ukrainian land by September. So if they annex Ukrainian land, any weapons sent to Ukraine in this land, Russia's going to look at that as these weapons are ours because we now own this land. So this is just increasing global conflict. And you know we don't get political on the Vinny G Markets channel, but we bring all this up for speculation when it comes to the prices of crude oil. I just see the inevitable world conflict that's about to go on outweighing this demand destruction or possible recession fears when it comes to the prices of crude oil, even though the mainstream media is telling you otherwise. And also we have something about, I didn't even get into it that much, trying to cap Russian oil at $10 a barrel. That's just totally ridiculous. I'm not even going to get into it. And also we can't be an oil supplier. Biden's advisor says oil reserve releases must end. One of Biden's top energy aides confirmed Friday the administration won't extend the oil releases from the Strategic Petroleum Reserve that are scheduled to end this fall. So we're going to see what happens now to the supply and demand when it comes to crude oil, especially if we decide we have to replenish these reserves that we sent out. The only thing that I see that could bring down the prices of crude oil significantly is if there's any breakthrough advancements when it comes to alternate energy or EV, electronic vehicles. And in my opinion, we're just years away from that. So I'm basically saying is when it comes to crude oil and energy, I'm going down with the sinking ship. If these prices do continue to dip, I'm just going to have to take that L because I just truly don't believe the prices of crude oil and energy are going to get significantly cheaper for anybody. And if you've been investing in crude oil and energy since we've been talking about it, you should still be up very nicely. So it's never wrong to take profits, but it's still a spot I want to be in going forward. But getting back to the overall market, the markets have been rallying, and it's due to one reason and one reason only. It's the central bank interest rate manipulation that's going on. And this could very easily be visualized as we went over this in our last video. We have the first announcement, European Central Bank to create new tool to address fragmentation risk and temper bond route. This announcement was on June 14th. On June 14th, the US 10-year Treasury went from all the way 3.5% down to 2.8%. And what happened with the market since then? It's up a total 8%. Now we go to the next announcement on July 15th. ECB bond tool seen having no limits. So they're telling you they have no limits on this bond buying tool. So on July 15th, that US 10-year Treasury, it did creep back up to 2.97%. And since this announcement, it went all the way down to 2.75%. So that dip in the interest rates, what happened with the market since then? Up almost 5% since these announcements. So the only reason why these markets are rallying are because the central banks are putting the perception out there that they're going to buy unlimited amounts of debt still, but this policy makes absolutely no sense. They're raising rates to supposedly fight inflation, but buying debt at the same time, which means they're creating more money out of thin air. And because central banks are also raising rates, it's just making this debt more expensive to to pay off, but I guess it doesn't matter anyway because this debt, it's going to be impossible to pay off. This is all to just reset the financial system that we're in, to create the new digital financial system. It's being made to implode eventually. So this is all opinion based. The bottom line is nobody knows where this market is going, and especially when you have the central banks manipulating like we've never seen before, only they know what's going to happen with the stock market. I personally believe they're just creating fake rallies to cause confusion, to keep people's money in the market, to not pull any profits, to keep it in there while they eventually get drained over time. But here on the Vinny G Markets channel, we know what to look for. As long as they keep these rates suppressed, with the 10-year treasury currently at 2.75, as long as it stays below 3%, I see these markets definitely having room to breathe to the upside. If you're trying to short-term play this market, the markets are going to stay at an elevated level as long as these interest rates stay suppressed through these central bank bond buying programs. If it wasn't for these bond buying programs, we've seen the interest rates start spiking and the market start selling off. But again, it just goes to show the central banks, they're not ready to have the stock market totally crash just yet, or it might be a controlled crash going forward. So when it comes to the stock market, we know we just have to look at the central bank's manipulation, what the interest rates are doing. Nothing else matters. Guidance, earnings, the actual economy, none of that matters when it comes to the stock market. If it did, we would have tanked already. There's only a few things that are hiding the economic state that we're currently in. Again, we're well past recession. One of the things hiding it is employment numbers are still good. It's relatively easy to find employment, but we have big tech starting to announce future layoffs, along with big banks announcing future layoffs. And the textbook example of what's about to happen is Ford. Ford is announcing future layoffs as they enter the EV space. This is all about the fourth industrial revolution, putting in electronic vehicles that are eventually just going to drive themselves. But as they lay people off, they're not going to hire them back. They're just going to have robots who are going to automate the whole assembly line that are going to build these cars. So they're not going to need humans anymore after they lay them off. And you could do your own research. All these automobile companies, including Ford, they already have this technology. They already work with these robotic companies. All this technology is in place. It's just about them implementing it, where eventually robots, drones, algorithm, AI take over the entire working economy while humans move into the metaverse. So another factor that's saving grace right now is people do still have equity in their homes. The prices of home values have just gone up significantly within the past 2-3 years, where people could still draw off that money. But if we take a look, we have mortgage demand plummeting to a 22-year low. Cities are starting to slash prices. We have inventory increasing. People are just tapped out. No one could buy houses anymore at these prices. They're just grabbing the last suckers right now who are gonna buy at these elevated prices. I just don't see housing staying like this when no one could afford it. But one thing we have to look at as well is, are these investment firms gonna slow down their purchases of real estate? We do have Blackstone, who just raised another $24 billion for its latest real estate fund, but are they going to use this money right now to buy houses at their current price, or are they going to sit on this money and wait for some type of correction, maybe not a crash, but some type of correction where they just snatch up more properties as people can't afford to pay their mortgages going forward, and where they lose equity in their homes where they can't draw money from, especially as interest rates rise. But just at a glance, again, this is all my opinion. The upside of real estate is just no longer there. I just don't see prices increasing at this point. Even if they just do remain the same, I just don't see any increases going forward. So the only other thing where people could fall back on would be their 401ks. They should still be in decent shape even with these market dips. The market's still up overall for a while now, but if we keep raising interest rates, and Uncle Jerome is in the house on Wednesday, Jerome Powell should be raising rates by 0.75% or by a full percentage point, where the markets could get hit if that happens, even though the markets usually do go up the same day he speaks. But we'll see what happens. But as long as we keep raising interest rates, and if we actually quantitative tighten, and if we see earnings get worse for these companies, this stock market is going to get drained along with 401ks. People don't know what to do anyway when it comes to pulling profits. They're just leaving it in there, and eventually it will get drained. And this all goes into lockstep of wiping out the middle class, because the economy isn't much better. We have inflation still going out of control. We have the PPI index report. Wholesale prices shoot up near record 11.3% in June on surge in energy costs. We have the Atlanta Fed showing showing that GDP is most likely going to be negative next quarter, showing we're likely in a recession. We wish we were in a recession. We're beyond recession. We have the Philadelphia Fed Manufacturing Index in the U.S. decreased for the fourth consecutive month to negative 12.3 in July of 2022, the lowest since May of 2020, and well below forecast, pointing to a flat reading. So they were expecting a reading of 0. They got negative 12.3. And as we have record high car payments hitting $700 per month, car repos are exploding. Also, AT&T just reported their earnings, and they say cash-strapped Americans can't afford to pay their phone bills on time, and AT&T shares crashed the most in 20 years because of that. People not able to pay their phone bills are actually affecting AT&T's bottom line and cash flow. It's probably only a matter of time before AT&T starts reporting layoffs because they're not going to eat this cash flow problem. So we know the only thing that's holding up these markets are the central bank's bond buying program, so we know we're going to monitor that like a hawk. So with the central banks taking on a mechanism of raising interest rates but still buying bonds at the same time to manipulate interest rates, I just see this as still being inflationary. That's why I still like crude oil, energy, and the food ETFs. Our food ETFs have been getting hammered as well. I believe Russia and Ukraine made some type of deal where they were going to ship grains out of a port that they were on hold with, but after that deal was made, Russia was launching missiles at this port apparently, so I don't trust that. I see the prices of food just increasing going forward. So we kind of treating our portfolio like we're hoarding for a disaster with energy, crude oil, and food. So we're basically hoarding our portfolio with essential items as if global catastrophe was going to take place, because like we go over in the beginning of this video, it's a very good possibility more global conflicts are going to arise. And as you know, if there is global expansion of these conflicts, that could hit the market as well, which we didn't even go over, but that's always a possibility that could crash the market. And also the Federal Reserve could point their finger the other way on why the markets crash, not because of them. So we pretty much know where I stand. Even if prices go down, I'm going to stay on this sinking ship when it comes to crude oil, energy, and these food ETFs. And when it comes to our fourth industrial revolution stocks and certain cryptos, we've been getting our feet wet since that pilot video. Again, as I've been stating, I've been holding off on accumulating more. There should be much more buying opportunities going forward. I mean, those are probably going to continue to get hammered. When it comes to options, don't follow this. You're definitely going to lose money, but we did enter a position with the triple T's, TTT. We got in at a strike price of 52 with an August 19, 2022 expiration with the $3.20 unit price, which just means it's a $320 contract. So going forward, I do want to change the format of these videos a little bit. I want to go over specific companies, what I see in those companies, possible option plays that again you will lose money on, like this TTT play for example. We're just betting that interest rates are going to rise again. As interest rates rise, so does this symbol. We're basically shorting the US Treasury at this point. So when it comes to losing plays like this, I do eventually want to set up an Instagram where people could get these updates in real time or as close as real time as possible. But at the end of the day, you know the Vinny G Markets channel, we stay making money even in a drought. So if that's all something you're interested in, come mess with your boy. Hulk smash that like button. And as always, I'll leave you off with this. The God of the Bible, the God of Abraham, the Father of our Lord and Savior Jesus Christ is real, and may he bless you.
Now, Ukraine and new U.S. intelligence warning Russia is laying the groundwork to permanently keep the territory it recently grabbed in Ukraine by annexing it. Richard Engel joins me. Richard, there could be major consequences if Russia follows through with that kind of a plan.
This is not just a symbolic step. When other countries, the United States, invaded Iraq, it was not to take Iraq forever and make it part of the United States. This is what Russia is doing. It is fighting a war of occupation and annexation. So by taking this territory, annexing it, making it part of Russia, Russia will say then that any attack on the territory that it controls inside Ukrainian territory is like an attack on Moscow. So it is putting down another gauntlet, so to speak, to the U.S. to supply weapons to Ukraine, saying, if those weapons that the United States is giving to Ukraine right now hit territory inside Ukraine, from Russia's perspective, it will be like it is attacking Moscow, it is attacking the center of the country.
How thoroughly has the Biden administration mismanaged American leadership around the world? Well, here's one very significant indicator. The Saudi Kingdom, Saudi Arabia, reportedly considering accepting Chinese currency instead of U.S. dollars for its oil sales to China. This would be a huge change. For almost 50 years, Saudi Arabia has traded oil exclusively in U.S. dollars, and that has been a massive boon to the United States. According to the Wall Street Journal, which broke this story, the Chinese government is, quote, offering everything you could possibly imagine to the Saudi